Hello and welcome back to Time with Tyler. This is our second video in the series of understanding your insurance deductibles and also making sense of all the insurance lingo. Now last week we discussed your automobile insurance deductibles and how they work with that policy. If you've not watched that video, please go back and view this. Now today we're going to be discussing your home insurance deductibles and how they work with that type of policy. Now, as a recap, a deductible is the amount of money that you are responsible for paying towards any type of insurance loss before your insurance company starts to pay. And remember, typically, the higher your policy's deductible is, the lower your annual or monthly premium payments will be. Now, as we showed you in the automobile insurance video, the same idea remains with your home insurance deductibles, that this is not always the best plan of action to go with the highest numbers that your company offers. Let's look at an example for a quote that we did on a potential client that we recently had on their home insurance. In doing a review, their current insurance carrier has their coverage A listed at $411,000, with their deductible clause 1 listed at 5% and their deductible clause 2 listed at 5% as well. Are you lost yet? Basically what this means is that the home is insured for up to $411,000 under coverage A. Deductible clause 1 applies to claims involving covered windstorm and hail damage. Now deductible clause 2 applies to claims involving all other types of covered damage such as fire, smoke, theft, etc. Now some companies even have a deductible clause 3 which applies to named storms or tropical cyclones such as Hurricane Harvey or Tropical Storm Beta. You may be thinking, the deductible of 5% is what? Insurance companies calculate the deductible as a percentage based off of coverage A. But let's step away from the insurance lingo and put this into simpler terms. If this insured had a covered loss to their home, they would be responsible for paying over $20,000 before the insurance company would start paying for the loss. This is a much higher number than the 5% you have in your head. What we did is we looked at lowering their deductible to 2% or around $8,200. This would raise their monthly premium about $46. So let me ask you, doesn't it make sense for this client to pay $46 more a month on their premium in order to save over $12,000 on their deductible should they have a loss? As you can see, going with the higher deductible in this case does not make sense for this client. You could be in a similar situation with your insurance policy and you may not even know it. This is where we can help. We can review your current policies and discuss with you your coverages and your deductibles in terms that you can understand. So please reach out. Let us take a look and explain your current situation to you without all the insurance jargon and see if we can give you a better buy for your insurance dollar. Thank you for watching. Have a great week. Stay safe, and we'll talk to you soon.